Hey everyone, welcome back to Corporate Dakota, the place where we peel back the curtain on corporate announcements and reveal the real story behind the numbers. Today we are diving into a filing from AiRWA Incorporated that has some interesting developments, especially concerning a significant sale of company stock. Before we get into the nitty-gritty, if you find value in understanding these corporate filings, make sure you hit that subscribe button. We also have a fantastic community over on Discord where we break down these reports further, and you can find the link in the description below. So what do we have here? It's a current report, a Form 8K filed by AiRWA Incorporated on the 14th of January 2026. These reports are used to announce major events that shareholders should know about, and this one certainly does. This filing is all about a material definitive agreement, which is just a fancy way of saying a big deal has been made. The big news is that on the 14th of January, AiRWA and its chairman, Hongyu Zhou, struck a deal. Mr. Zhou is buying a significant chunk of the company's stock. He is purchasing over 4.2 million shares of AiRWA's common stock. This is not a small number, folks. The price is set at $1.37 per S-share. Now, let's do a quick calculation. With over 4.2 million shares at $1.37 each, that's a hefty sum. This means the company is set to receive a significant amount of cash, around $5.7 million. That is a lot of money for a company to bring in from a single investor, even if that investor is the chairman. And here is the kicker: this purchase represents about 10% of the company's total shares after the deal is done. So the chairman is not just buying some shares, he is significantly increasing his stake, showing serious confidence or perhaps a strategic move to consolidate control. The deal is expected to be finalized around the 20th of January, so very soon this influx of cash will be in AiRWA's coffers. What will they do with all this money? The plan is to use it for everyday operations, what they call working capital, and other general business needs. They also mentioned that some of it might go towards buying other companies or assets, though they don't have any specific targets right now. This hints at potential future growth or expansion plans. Now, this part is a bit technical, but it basically means they handled this stock sale without needing to register it with the public. This is common for private placements to sophisticated investors, like a company's chairman, and it's allowed under specific exemptions in securities law. It means they are saying this deal was done appropriately and legally. Just to give you some context on AiRWA, their common stock is traded on the Nasdaq capital market under the ticker symbol YYAI. This tells us the par value of their stock is very low, just a fraction of a cent. What's more important is the actual trading price and the number of shares outstanding. So with YYAI trading on Nasdaq, any significant transaction like this can potentially impact the stock price and investor sentiment. And for those interested in company status, AiRWA is not currently electing to be considered an emerging growth company. This means they are likely past those initial stages of rapid growth and might have more established reporting requirements. This section simply reinforces the earlier point about the stock sale. All the details we just covered about Mr. Zhou buying shares are directly relevant here, confirming that it was indeed an unregistered sale of equity securities. The actual contract, the securities purchase agreement, is filed as an exhibit to this report. This is the legal document that lays out all the terms and conditions of the sale between AiRWA and Chairman Zhou, and you'll always find this section in these reports. It's a standard disclaimer. AiRWA is telling everyone that some of the statements made in this report are not about past events but about future expectations. They caution that actual results could be very different from what they are predicting due to various risks and uncertainties. This is a crucial reminder that while they have plans and hopes, the business world is unpredictable. Now, let's look at this whole situation from a broader perspective like Warren Buffett might. We have the chairman of AiRWA buying a substantial stake in his own company. This can be interpreted in a few ways. On the positive side, it signals strong conviction from leadership. Mr. Zhou is putting his own money where his mouth is, which can be a very reassuring sign for other investors. It suggests he believes the company has significant potential and that the current stock price, or the price he is paying, is a good deal. The fact that this is an unregistered sale using exemptions like Section 4 and to an Regulation D means it was likely a private transaction. This is common for significant insiders. The 10% stake is notable. It suggests an effort to increase his ownership percentage, perhaps to gain more control or to align his interests even more closely with the company's success. The use of proceeds for working capital and general corporate purposes is standard. It means the company needs the cash infusion to keep its operations running smoothly and to have flexibility. A $5.7 million boost is significant, and it will undoubtedly help AiRWA manage its short-term financial obligations and fund its day-to-day activities. The mention of potential acquisitions also shows a forward-thinking strategy. Even if there are no concrete plans yet, it indicates management is looking for growth opportunities beyond just organic expansion. However, we should also consider potential risks. While insider buying is generally positive, we don't have the full picture of AiRWA's financial health prior to this infusion. Is this cash injection a sign that the company was facing a cash crunch? Or is it simply a strategic move by the chairman, without access to their more detailed financial statements? The prior period's financial health is not detailed here. This filing is focused on the transaction itself. The fact that this is not a public offering means that regular investors didn't get the chance to buy in at $1.37. Per S-Hair, they will have to buy it at whatever the market price is on NASDAQ. This is a key difference between insider transactions and public offerings. AiRWA Inc. is a publicly traded company YYAI, so it is subject to market forces and investor sentiment. A substantial purchase by the chairman could influence this. It shows that the person at the helm believes in the future value of the company. In conclusion, this filing is a clear signal of confidence from AiRWA's chairman. The significant purchase of company stock, while a substantial financial commitment from Mr. Joe, also provides a much-needed capital injection for AiRWA. The company's stated intention to use the funds for working capital and potential acquisitions points towards a strategy of stability and growth. While we don't have deep financial numbers here, the chairman's action is a strong indicator of his belief in the company's future prospects. What is your take on this insider buy? Do you see it as a positive endorsement, or are there underlying concerns? Let me know your thoughts in the comments below. If you found this breakdown helpful, please give this video a like and subscribe for more in-depth corporate insights. And don't forget to join our Discord community for more real-time discussions. Thanks for watching, and I'll see you next time on Corporate Decoder.